Imagine waking up tomorrow to a financial earthquake so powerful it reshuffles the entire global economic order, a day where the unthinkable happens and a currency you've been told for years was a long-shot investment suddenly, violently, explodes in value, sending shockwaves from the skyscrapers of Wall Street to the trading floors of Hong Kong and leaving central bankers and hedge fund managers scrambling in a state of pure panic. This is not a drill, and this is not the plot of a fictional Hollywood movie. This is the very real, very tangible potential we are facing as we barrel towards the year 2025, a year that is rapidly shaping up to be the ultimate litmus test for global currency markets and the stage for what could be the single most significant wealth transfer event in modern history, centered on a nation that has been quietly, methodically building an economic powerhouse right under the noses of the Western world, Vietnam. The Vietnam Dong, often dismissed and relegated to the sidelines of mainstream financial news, is now positioned at the epicenter of a perfect storm of geopolitical maneuvering, breathtaking industrial growth, and strategic financial policy that could see its exchange rate undergo a revaluation so profound and so sudden that it would fundamentally alter the balance of power in Southeast Asia and send a clear, unmistakable signal to the entire world that the era of absolute Western financial dominance is officially, irrevocably over. The signs are all there for those willing to look past the conventional narratives and dig into the raw, unfiltered data emerging from Hanoi and Ho Chi Minh City, data that points to a nation not just recovering from global economic headwinds but actively thriving and leveraging those very challenges to its own distinct advantage, creating a resilient, diversified, and innovation-driven economy that is less reliant than ever on the whims of American consumer spending or European industrial demand. We are witnessing a masterclass in long-term economic planning, a multi-decade strategy that began with Doi Moi economic reforms and is now reaching its ultimate, breathtaking crescendo, with the nation securing massive trade deals, attracting unprecedented foreign direct investment from tech giants like Samsung and Intel, and establishing itself as the undisputed manufacturing hub of the future, all while meticulously managing its currency to avoid the pitfalls of premature appreciation until the precise moment when such a move would deliver maximum strategic impact. That moment, according to a growing chorus of expert analysts and insiders with deep connections to the State Bank of Vietnam, is fast approaching, and all indicators point to a window of opportunity in 2025, a year that aligns with key political milestones, the fruition of critical infrastructure projects, and a potential shift in global supply chains that would provide the ideal cover for a monumental policy decision. The implications of a Dong Revaluation are staggering to comprehend. It would instantly increase the purchasing power of the Vietnamese people by an order of magnitude, wipe out dollar-denominated debt on the national balance sheet, turbocharge imports of essential technology and resources, and establish the nation as a formidable financial sovereign, all while triggering catastrophic losses for speculators who have been shorting the currency and forcing a brutal reassessment of risk across all emerging markets. This is the story that the mainstream financial media is not ready to tell you, the narrative that challenges the very foundations of their outdated models, and it's a story that is inextricably linked, in a fascinating and parallel dimension of the global financial system, to another currency that has been the subject of intense speculation and hope for millions of investors around the globe, the Iraqi Dinar. The connection is not one of direct causation but of shared underlying currents, the re-emergence of nations long suppressed by conflict or sanctions onto the world stage, the slow but steady erosion of the petrodollar system, and the collective awakening of the global south to the power of their own resources and economic potential, a dual-fronted assault on the status quo that makes the events of 2025 not just a possibility but an inevitability. The shock to the global markets will be profound, a seismic event that will be felt in your retirement portfolio, in the price of goods on the shelf, and in the very confidence we place in our traditional financial institutions. And for those who are not prepared, who dismiss this as mere fantasy, the awakening will be rude and financially devastating. The data doesn't lie. Vietnam's GDP growth has consistently been among the highest in the world, even amidst global recessions, showcasing an economic engine that is both robust and dynamic, fueled by a young, tech-savvy population and a government fiercely committed to becoming a high-income nation by 2045, a goal that necessitates a stronger, more internationally respected currency to facilitate its ambitions. Look at the export figures, which have skyrocketed past the $400 billion mark, transforming the country from a war-torn nation into a global export juggernaut, surpassing regional rivals and now standing shoulder to shoulder with economic giants, a trajectory that is fundamentally incompatible with a perpetually weak currency and one that builds immense pressure for a recalibration of its true value on the world stage. Foreign reserves are at an all-time high, providing the State Bank of Vietnam with an immense war chest to defend any new exchange rate regime it chooses to implement, effectively insulating the country from the speculative attacks that have crippled other emerging economies and giving it the sovereign power to dictate the terms of its own financial future without bowing to external pressure from the International Monetary Fund or the World Bank, institutions that have long advocated for policies that serve the interests of the developed world at the expense of nations like Vietnam. Inflation, the traditional enemy of currency strength, has been tamed and managed with remarkable skill, remaining within the government's target bands even as the Western world grappled with historic inflation spikes, proving that Vietnam's central bankers are not amateurs but strategic thinkers who have learned from the mistakes of others and are now poised to execute a masterstroke that will be studied in economics textbooks for generations to come. The stage is set, the actors are in place, and the script for a financial revolution is being written in the committee rooms of Hanoi, a script that calls for a dramatic, market-shocking reappraisal of the Vietnam dong in 2025, an event that will not happen quietly but will arrive with the force of a typhoon, appending portfolios and geopolitical assumptions in one fell swoop. Now, let's pivot to the other side of this explosive equation, the Iraqi dinar, a currency shrouded in decades of war, sanctions, and fervent speculation, because what's happening in Vietnam cannot be fully understood without acknowledging the parallel seismic shift preparing to erupt from the heart of the Middle East, creating a perfect storm that will overwhelm the existing global financial architecture. While Vietnam's story is one of organic economic ascendance, Iraq's path to a potential 2025 revaluation is a complex tapestry woven from geopolitical brinkmanship, vast untapped resource wealth, and a desperate national need to break free from the economic shackles that have crippled it for generations, a story just as compelling and, for global markets, just as dangerous. The critical link here is the accelerating decline of the petrodollar system, the decades-old agreement that mandated oil be sold in US dollars, a system that has guaranteed global demand for the dollar and allowed America to run massive deficits, but a system that is now showing profound cracks as nations like Iraq and Vietnam seek greater monetary sovereignty and refuse to be collateral damage in a dying financial empire. Iraq sits on some of the world's largest proven oil reserves, yet its currency remains a fraction of its theoretical value, not because of a weak economy in the traditional sense, but because of political instability and the lingering effects of a financial system deliberately dismantled. But the winds of change are blowing fiercely across the Iraqi desert, with the government aggressively pursuing infrastructure projects, pushing for foreign investment outside the oil sector, and most importantly, engaging in high-stakes talks to finally revalue its currency to reflect its true economic potential and unshackle itself from a punitive exchange rate set by its former occupiers. The news coming out of Baghdad today isn't just about sporadic violence, it's about a nation methodically rebuilding its financial institutions, with the Central Bank of Iraq announcing new digital payment systems, working towards international compliance standards, and subtly preparing the domestic market for a monumental shift, actions that mirror, in a different context, the strategic preparations being undertaken by the State Bank of Vietnam, suggesting a coordinated understanding among emerging nations that 2025 represents a historic inflection point. The geopolitical chessboard further amplifies this, with Iraq moving closer to economic and strategic partnerships with both Iran and China, reducing its reliance on the United States and the dollar for its economic survival, a bold move that would have been unthinkable a decade ago but is now a tangible reality, giving Baghdad the political cover to make a sovereign decision about its currency without needing permission from Washington or Brussels. Imagine the domino effect. A sudden, sharp revaluation of the Vietnam dong, triggered by its economic miracle, sends a shockwave through emerging market portfolios, forcing global investors to desperately search for the next undervalued asset, and their screens will inevitably light up with the Iraqi dinar, a currency so historically depressed that even a modest adjustment would represent astronomical percentage gains, creating a frenzy of buying pressure that the market has never seen before. This isn't mere speculation, it's a predictable outcome of behavioral finance on a global scale, where the success of one high-profile revalidation validates the thesis for another, creating a self-reinforcing cycle that drains capital from traditional safe havens and floods it into these frontier markets, completely rewriting the rules of international investing overnight. The combined effect of Vietnam and Iraq making coordinated or even sequential moves to strengthen their currencies would represent a body blow to the US dollar's supremacy, as it would signal to every other resource-rich and economically burgeoning nation from Indonesia to Brazil that the time for subservience is over and the era of monetary multipolarity has begun, leading to a stampede away from dollar-denominated assets and into a new basket of global currencies. The data from Iraq, when you look past the headlines, supports this bold thesis. Oil production is steadily climbing back to pre-war levels and beyond, providing a massive and consistent stream of hard currency revenue that fundamentally supports a stronger dinar, while the government's budget, for the first time in years, is being executed with a focus on development rather than pure survival, allocating billions for reconstruction projects that will boost non-oil GDP and create a more diversified economic base that can sustain a revalued currency. Furthermore, the pressure from within Iraqi society for a revaluation is becoming a political imperative, with a population tired of seeing its purchasing power evaporate and its national pride diminished by a weak currency, forcing the government's hand to take dramatic action to ensure its own political survival, making a move in 2025, a period